Picture this. You wake up tomorrow morning and every pound you have saved, every investment you have made, every bit of financial security you thought you had built has lost half its value overnight. Sounds dramatic, does it not? But here is the uncomfortable truth. This has happened before. It happened in Germany in the 1920s. It happened in Argentina. It happened in Zimbabwe. And if you think it cannot happen here in the UK or anywhere in the developed world, you are not paying attention to what the smartest investors on the planet are quietly preparing for right now. Ray Dalio, the man who built one of the most successful hedge funds in history, has been sounding an alarm. Not in a panicked way, not with clickbait hysteria, but with the calm precision of someone who has studied economic cycles for over 50 years. And what he is saying should make every single one of us sit up and rethink how we are protecting our wealth today. You see, most people go through life following the same tired financial advice. Save money in a bank account, buy a house, maybe put a bit into a pension, get some stocks if you are feeling adventurous. But here is the problem with that approach. It assumes the world will stay roughly the same as it has been for the last few decades. Stable currencies, low inflation, governments that can be trusted to honor their debts. What happens when those assumptions break down? Let me take you back for a moment. Imagine you are living in Britain in the early 1970s. You have done everything right. You saved your money diligently. You trusted the system. Then inflation hits double digits. Your savings are being eaten alive. The purchasing power of your hard-earned cash is vanishing before your eyes. People who owned real assets, property, gold, commodities, they survived. The people who had everything in cash or government bonds got destroyed. That is not theory. That is history. And Dalio has spent his entire career understanding these patterns. He calls it the big debt cycle. Countries borrow too much. Central banks print money to keep the system going. Eventually, the currency loses value and people scramble to get into assets that cannot be printed or devalued. We are not talking about conspiracy theories here. We are talking about mathematical certainties that play out over and over again throughout human history. So why is now different? Why is Dalio warning us with such urgency? Because we are sitting on the largest debt bubble in human history. Governments around the world, including right here in the UK, have borrowed amounts of money that would have been unthinkable just 20 years ago. The Bank of England, the Federal Reserve, the European Central Bank, they have all printed trillions to keep economies afloat. And while that might have prevented an immediate collapse, it has created something far more dangerous. A ticking time bomb of devalued currency and inevitable inflation. Think about what has happened to prices in just the past few years. Your energy bills, your grocery shopping, petrol, housing, everything has gone up, and not by small amounts. Wages have not kept pace. Your savings account paying 0.5% interest while inflation runs at 5 or 6 or 7% means you are getting poorer every single year just by playing it safe. This is where most people make the fatal mistake. They think safety means keeping money in the bank. They think risk means investing. But the real risk, the one nobody talks about, is doing nothing while your purchasing power evaporates. Dalio has identified something crucial. In times of currency devaluation and economic upheaval, only certain types of investments survive. Not all assets are created equal. Some get crushed. Some barely hold their value, and a select few not only survive but thrive. He has narrowed it down to 4 specific categories, 4 types of investments that have proven themselves throughout history when everything else fails. Now, before I reveal what those 4 are, I want you to understand something fundamental about wealth. Real wealth is not about how many pounds you have in your account. Real wealth is about what those pounds can buy. It is about purchasing power. It is about being able to afford the life you want not just today, but 10 years from now, 20 years from now. And that requires thinking differently than the majority of people around you. The wealthy, the truly wealthy, they do not keep their money in cash for long. They understand that cash is a tool for transactions, not for storage. They move their wealth into assets that hold value regardless of what happens to paper currency. And that is exactly what we are going to explore today. You need to understand something that most financial advisors will never tell you. The traditional 60-40 portfolio, 60% stocks and 40% bonds, that strategy was built for a world that no longer exists. It was designed for an era of falling interest rates, stable inflation, and predictable economic growth. But we are entering a fundamentally different environment now, and clinging to old strategies in a new world is like bringing a map of London to navigate Paris. It simply does not work. Let me explain what Dalio sees happening. We are in what he calls a paradigm shift. These shifts do not happen often, maybe once or twice in a lifetime, but when they do, everything changes. The rules that worked before suddenly fail. The investments that seemed safe become dangerous, and the moves that seemed risky become essential for survival. Think about your grandparents or great-grandparents. If they lived through the Second World War, they understood scarcity in a way most of us cannot imagine. They saved everything. They wasted nothing. They kept gold coins hidden away because they knew that when systems collapse, paper promises mean nothing. That wisdom has been forgotten in our era of abundance and digital banking, but it is about to become relevant again. So what are these 4 investments that Dalio says will survive? Let me walk you through each one and explain why they matter. The first is gold. Now, I know what some of you are thinking. Gold does not pay dividends. It does not generate income. It just sits there, and you are absolutely right. But that is precisely the point. Gold has been a store of value for over 5,000 years. Every major civilization in human history has recognized gold as wealth. Why? Because you cannot print it. You cannot create it out of thin air. Governments cannot devalue it with a keystroke. When currencies collapse, gold remains. When banks fail, gold remains. It is the ultimate insurance policy against monetary chaos. Look at what happened during the 1970s inflation crisis. While cash lost half its purchasing power, gold went from $35 an ounce to over $800. People who owned gold did not just survive, they prospered. And right now, central banks around the world are buying gold at record levels. China is buying. Russia is buying. India is buying. Do you think they know something we do not? But here is what most people get wrong about gold. They treat it like a speculation, trying to time the market, buying when it is high and selling when it is low. That is not how you use gold. Gold is not an investment you trade. It is wealth insurance you hold. You buy it and you forget about it, knowing that if everything else falls apart, you still have real money that has stood the test of time. The second investment Dalio points to is inflation-linked bonds. Now stay with me here because this sounds boring, but it is brilliant. Regular bonds are a disaster in high inflation. You lend the government money at, say, 3%, inflation runs at 7%, and you are losing 4% per year in real terms. But inflation-linked bonds, like our own UK index-linked gilts, adjust their value based on inflation. If prices go up, your bond value goes up. If inflation hits 10%, you get paid 10%. It is one of the few ways to stay ahead when currencies are being devalued. The beautiful thing about these bonds is they are guaranteed by the government. Yes, the same government that is creating the inflation problem, but they are legally obligated to pay you based on their own inflation figures. It is like making the arsonist pay for the fire insurance. Not perfect, but far better than holding regular bonds or cash while inflation destroys your wealth. Third on Dalio's list, and this might surprise you, is stocks. But not just any stocks, specifically companies that own real assets and have pricing power. What does that mean? It means businesses that own things like property, infrastructure, natural resources, commodities, things that hold value regardless of what happens to currency. And pricing power means they can raise their prices when inflation hits without losing customers. Think about essential utilities, water companies, energy providers. They own physical infrastructure worth billions, and when costs rise, they simply pass those costs on to consumers. Or consider commodity producers, oil companies, mining firms. When inflation drives up the price of raw materials, these businesses benefit directly. Their profits rise with inflation rather than being destroyed by it. Compare that to a technology company that just sells software or a retailer operating on thin margins. When inflation hits, their costs explode, but they cannot necessarily raise prices without losing business. Those companies get crushed, but businesses with real assets and pricing power, they are like ships designed to sail through storms while others sink. The fourth investment Dalio emphasizes might be the most important of all, and it is one that makes many people uncomfortable. Real estate, but not just any property. Strategic real estate in the right locations with the right characteristics. Here is why property has survived every major economic crisis in history. Land is finite. They are not making any more of it, especially not in desirable locations. And unlike cash or bonds, property cannot be printed by a central bank. It exists in the physical world. When inflation ravages paper wealth, buildings and land retain their value because people still need places to live and work. But you have to be smart about this. Not all property is created equal. A luxury flat in an oversaturated market is very different from a well-located rental property in an area with strong employment and limited supply. Dalio is not suggesting you rush out and buy any property you can find. He is talking about real estate that generates income, property that pays you rent while also appreciating in value over time. Think about it this way. If inflation runs at 8% per year, and your rental property appreciates at 8% while also paying you a 5% rental yield, you are not just protecting your wealth, you are growing it substantially. Meanwhile, your mate who kept everything in a savings account is watching his purchasing power vanish year after year. And here is something most people do not realize. When you have a mortgage on property and inflation hits, you are essentially paying back that loan with devalued currency. If you borrow £200,000 and inflation runs high for several years, you are paying back that debt with money that is worth significantly less than when you borrowed it. The bank loses, you win. Property with leverage in an inflationary environment is one of the most powerful wealth-building tools available. Now let me tie all four of these together, because this is where it gets really interesting. Dalio is not saying put everything into one of these. He is saying diversify across all four. Gold for insurance, inflation-linked bonds for stability, stocks in real asset companies for growth, property for income and appreciation. This combination creates a portfolio that can survive and thrive regardless of what happens next. But here is the critical question. Why is Dalio warning that we only have 18 months? What does he see coming that makes this so urgent? The answer lies in the mathematics of debt. Governments around the world are trapped. They have borrowed so much money that they cannot afford to let interest rates rise too high, or they will be crushed by debt payments. But they also cannot keep rates too low or inflation will spiral out of control. They are stuck between two impossible choices. What happens when you are stuck between impossible choices? Something breaks. Either we get a deflationary crash where asset prices collapse and the economy freezes, or we get runaway inflation where currencies lose value rapidly. Dalio believes the latter is far more likely because governments will always choose to print money rather than default on their debts. And when that happens, the people holding cash and traditional investments will be devastated while those positioned in the four asset classes we just discussed will be protected. Look at what is happening right now in real time. The Bank of England keeps saying inflation is temporary, that it will come down soon. But does it? Food prices keep rising, energy keeps rising, housing keeps rising, and wages are not keeping up. This is not temporary. This is the beginning of a fundamental repricing of everything in our economy. You have a choice to make. You can ignore these warnings and hope everything works out. You can keep doing what you have always done and pray that this time is different. Or you can take action now while you still have time. 18 months might sound like a long runway, but it is not. Markets move slowly until they do not. Currency crises do not announce themselves with a polite warning letter. They arrive suddenly, often overnight, and by the time the general public realizes what is happening, it is too late to protect yourself. I want you to imagine two versions of yourself 3 years from now. In the first version, you ignored everything we talked about today. You kept your money in the bank, maybe bought a few traditional stocks, followed the conventional wisdom. Inflation has been running high. Your savings have lost 30 or 40% of their purchasing power. Everything costs more, but your wealth has not grown to match. You feel stuck, anxious, watching opportunities slip away while bills pile up. Now imagine the second version. You took action. You moved a portion of your wealth into gold. You bought some inflation-linked bonds. You invested in companies with real assets and pricing power. Maybe you even purchased a rental property or invested in a property fund. Inflation still happened, but your wealth was protected. In fact, it grew. While others struggled, you maintained your purchasing power and your peace of mind. Which version of yourself do you want to be? This is not about getting rich quick. This is about preserving what you have already worked so hard to build. This is about ensuring that the sacrifices you have made, the hours you have put in, the discipline you have shown actually mean something 10 years from now. Ray Dalio did not build his success on luck or speculation. He built it on understanding patterns that repeat throughout history. He studied the fall of empires, the collapse of currencies, the rise and fall of economic systems going back centuries. And the pattern he sees now is unmistakable. We are in the late stages of a long-term debt cycle, and the consequences of that are about to become very real for millions of people. But here is the empowering part of this message. You are not powerless. You have agency. You can make decisions today that will fundamentally alter your financial future. The wealthy have always known this. They do not panic during crises because they are positioned correctly before the crisis arrives. They move their wealth into assets that survive storms while everyone else is still pretending the weather will stay calm forever. Let me give you a practical example. Say you have £50,000 in savings sitting in a bank account earning barely anything. That money is losing value every single day that inflation exceeds your interest rate. What if you took $10,000 and bought physical gold, another $10,000 into inflation-linked bonds, perhaps $15,000 into a diversified portfolio of commodity stocks and infrastructure companies, and maybe the remaining $15,000 as a deposit on a rental property or into a property investment fund. Suddenly, you have transformed from someone who is passively losing wealth to someone who is actively protecting and growing it. You are no longer dependent on the government getting inflation under control. You are no longer hoping that the Bank of England makes the right decisions. You have taken your financial destiny into your own hands. Now I know what some of you are thinking. This sounds complicated. I am not a financial expert. I do not know how to buy gold or pick the right stocks or evaluate property investments. And that is a fair concern. But here is the beautiful truth. You do not need to be an expert to implement these strategies. You just need to be willing to learn and take action. Buying gold is as simple as going to a reputable dealer online or in person. You can buy physical gold coins or bars and store them securely at home or in a safe deposit box. Or you can invest in gold through exchange-traded funds that track the gold price if you prefer not to deal with physical storage. Inflation-linked bonds can be purchased directly from the UK government through their website or through your investment platform. Index-linked gilts are available to any UK investor. It takes less than an hour to set up an account and make your first purchase. Stocks in companies with real assets and pricing power are available through any brokerage account. Look for businesses in sectors like energy, utilities, mining, infrastructure, real estate investment trusts. You do not need to pick individual stocks if that feels overwhelming. There are funds and exchange-traded products that bundle these types of companies together, giving you instant diversification. And property investment does not require you to become a landlord if that does not appeal to you. Real estate investment trusts allow you to invest in property portfolios managed by professionals. You get the benefits of property ownership, the income, the inflation protection, the appreciation, without the hassle of dealing with tenants and maintenance. The barrier to entry is not knowledge or expertise. The barrier is decision. The barrier is taking that first step from thinking about protecting your wealth to actually doing something about it. And time is running short. Dalio is not the only one warning about this. Other legendary investors, people who have built billions by understanding economic cycles, are saying the same thing. They are moving their own money into these exact asset classes. They are preparing for a world where currency devaluation accelerates and traditional safe havens fail. You have spent your whole life working for money. Now it is time to make your money work for you in a way that actually protects you against what is coming. This is not fear-mongering. This is facing reality with clear eyes and making intelligent decisions based on historical patterns and current economic fundamentals. Every major wealth transfer in history has happened during times of crisis. The people who see it coming and position themselves correctly become wealthier. The people who ignore the warnings and cling to old strategies lose everything. It happened during the Great Depression. It happened during the inflation of the 70s. It happened during the financial crisis of 2008. And it is about to happen again. But you now have something that most people do not. You have knowledge. You understand the 4 investments that survive when everything else fails. You know why they work. You know how to access them. The only question remaining is whether you will act on this knowledge or let it slip away into the endless noise of modern life. 18 months from now, you will look back on this moment. You will remember hearing these words, and you will either feel grateful that you took action or regretful that you did not. The choice is entirely yours, but the window is closing fast. Protect what you have built. Secure your future. Position yourself not just to survive, but to thrive in the challenging times ahead. Your future self will thank you.